All right, ladies and gentlemen, I hope you had a wonderful day. It was a pretty bad day on Wall Street. The NASDAQ saw one of its worst down days since October. Bitcoin hit an all-time high, then sold off, and then gold hit an all-time high and then held up. There was a bunch of other headlines like Apple and AMD, and we'll get into all of that. But now tomorrow we get big data with the JOLTS Jobs Openings, and then we hear from Jerome Powell, and this is going to kick off this week in terms of where do we go next and where do we go for the month of March. So, Chad, we got a lot to talk about. I got the plays for you. I have the keys. We're going to talk a little bit about today, a little bit about tomorrow, and then the broadness, and then go over all of the plays for today and the ones we're looking at for tomorrow. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, like I already told you, it was a pretty bad day. However, there's a lot of context that goes into it. I told you there was bad Apple news. If you haven't seen their chart, you should check it out because a lot of people are saying there is a huge divergence between Apple stock and where the NASDAQ is currently trading at. But the news that came out today was that the demand for the iPhone in China for the first 6 weeks of 2024, it was down like 16 to 20% compared to last year. That was bad news. Then AMD, they actually didn't close that bad, but they had news that they ran into issues with one of the chips that they were selling to China. Apparently, it was too overpowered, and now they need to apply for a license, but they're still near all-time highs right there. And then finally, there was news from the Fed. It was based off of Bostic's comments, and he talked about cutting rates and then pausing, but essentially this was a new idea from the Fed. Lately, we've been hearing a lot of the same back and forth. Well, this has kind of been a new thought, and this is one that Bostic is getting behind, and this introduced a little bit of doubt about rate policy because everyone's been saying, no, we either stay the same or we cut by 3 or we cut by 7, but what about this scenario where now we cut and then go back to pausing and waiting for a while? Well, that is now being discussed, and that all introduced some of the negativity for today. So, like I'm saying, it was a pretty bad down day. You take a look at everything. NASDAQ down 165. It was down as much as 2% intraday. S&P closed down 1. Same thing for the Dow and Russell, and we pretty much sold off all day. Even pre-market, we were doing pretty bad, and from the high of yesterday, I think it was almost 100 points on the SPX. So, had people feeling a certain type of way, but to give you a little bit more context, where we traded to today, it was to the low of last Tuesday. So essentially, we are still holding that gain from the NVIDIA earnings. Even a lot of the gains of last week, you are still elevated. Just about 2 weeks ago, the all-time high was 5,000. We broke above that to 50.50, and then we sold off to 49.24, almost 100 points in a day, bounced back up, sold back off, and then before you know it, you started going crazy again. So maybe we do this all over again because this was NVIDIA catalyst, and well, by the end of this week, we're going to have the jobs catalyst, and then next week, CPI, and then the next week, Jerome Powell. So Chatadonia, I hope you're ready for all of it, but today was a pretty wild one, and now, like I told you, tomorrow is about to get a little wild. So the job openings, that is going to kick off the first set of jobs data this week. You're going to get private payrolls the day after that, then jobless claims, and then you end the week with non-farm payrolls. But job openings, lately, this has been getting the market moving. But now I'm making a big deal. One, it's going to kick off the data, but two, The jobs data this week is going to be very hard to read. Why I'm making such a big deal about this, I was reminding people today, you have to remember what happened at the last jobs report. The last job openings last week or last month, the market reacted favorably to it, but what I really want you to understand is what happened on the last non-farm payrolls. I brought this up on stream, and if you do not remember, the last non-farms was forecasted to be about 175,000, 180,000 jobs. It came in at 353,000. It was a monster beat. This time around, we're expecting a little bit higher than what we were expecting last month, so we'll see what happens. Last month did have a lot of revisions, and they did revive the month before that a lot, but why I'm bringing this up and why I'm saying this is all going to be difficult because, one, last month when we had this data, we had our own little reaction to the JOLTS jobs report and all the data. Everybody was very favorable, and then the non-farms came in, and that surprised everybody, and then we went down, we went up, then we went down, and then a couple days later, we started rocketing back up. If you don't remember that last non-farms payrolls, it was on February 2nd. Like I'm saying, we reacted a little bit throughout that week. We rocketed up here, and I don't have the daily, but I don't know if you remember what happened that day on stream. The market was down. People were like, are we down because of the non-farms for about 30 minutes an hour? I was saying, yeah. 2 hours later, the market was up, and they're like, why is this happening? Is it because of the non-farms? Or like, maybe you could say that. And then 4 hours later, the market is trading back again lower. And then you're saying, well, is it the non-farms? And why I have the daily up here is because the market proceeded to go on and hit several new highs after all of that happened, even though it was a very strong report, and even though that would have been seen as negative by the market. And now putting this into context, we have a lot of wild cards this week with all the jobs data because given that last reaction, who's to say how the market is really going to react? Is one thing how it's going to affect bonds, but is good news going to be bad news? Is bad going to be good? It will be hard to say. Even today, a little bit of an ISM miss had a big reaction on the bonds. Market still stayed down. It will be difficult to tell. There is still so many divergences going on right now that we are going to have to keep our head on a swivel this week. So generally, if it is another beat, since it isn't a month of big revisions, I don't think we should have a good reaction. It should be very negative. Again, multiple big jobs beats in a row. That would be very negative for the market, in my opinion, but who knows? We'll have to keep on a parachute or put on your seatbelt. Anything could happen, but then if we do get a big jobs miss, I think that could cool down a lot of things. So high jobs report, I don't know if it would be bearish. I want to say it would be. Can't say it with confidence given what we saw last time. And then I do think a miss, as long as it's not a huge negative miss, then the market will eat that up and everybody will love it. So keep that in mind. The next thing we got to be looking out for tomorrow is going to be Powell. I don't have any notes on it. It's very simple. The last time Powell moved the markets before Congress, that was in March of 2022. So if March in 2024, 2 years later, he wants to bring that same mentality and use this as an opportunity to lead into what's happening and talk about policy, or kind of keep this strategic ambiguity, keep the same message and pound it home and stick to that. That's going to be up to Powell, but most people are not expecting for him to move things. He will get a lot of attention, but we'll keep our eyes out. We are definitely going to listen on stream. If he does say something, we will be there. Otherwise, most people are expecting that he is not going to say much. So keep that in mind. There will be questions towards quantitative tightening, and that may add a little bit of a bullish tailwind, if anything. So watch out for that. That is key number 2. And then finally, the final thing, man, related to today and moving forward, there's 2 little factors. One, gold. We've been talking about the dollar being strong. Gold keeps climbing, even Bitcoin. Gold really does not like something here. It could be in regards to credit, debt, the government shutdown. I mean, we have the election, so many things happening, but gold going up, this is really starting to add to the amount of divergences because it's not like the rate cut odds or the Russell is going up with it. Gold is trading like it is the NASDAQ, and that one should be making you scratch your head, especially if the dollar is going up. So keep your eyes out on this, especially after the data and into Powell. And then the final thing we talked about, we had a lot of discussions today, but just keep in mind where oil is right now. Maybe the gold and all these divergences are happening. The market's not really responding. NVIDIA, again, even went up today with SMCI, but maybe we will get a reaction if the final straw that breaks the camel's back is once again going to be oil. If that starts breaking out above $80, $90 again, watch if that moves. It shouldn't go above there. That's why I'm saying maybe that is why people are feeling confident. Oil is staying subdued. Maybe they will lose confidence and maybe other things are just front running the way. But either way, keep your eyes out for gold until Powell. Watch all the data with all of it. Get ready for the data tomorrow. See if anything new comes out of it. But now, let us get into the plays. So, right off the bat, I got a couple of different plays. I actually made a lot of different plays. I sold out of SPR, had like $1,200 or $1,100 in gains. Brought that one up yesterday, could have made way more money. Got out of that. I closed out of my ZB play, made a good profit. Remember, we made that one on the live watch list. Well, I got out of that and my rollover with a profit from the last one, which was a loss. So that was good. I got into a play on oil. We're going to talk about that. Made a flip on Snapchat. They had news about TikTok getting banned, and they did that little hype run that they usually do, and then I averaged down on JD for a play on earnings tomorrow, and then I sold out of my Pfizer call that we made the day before. We made that free. I got a CNBC pump, but besides that, I'm listing all these different plays because first play of the day is going to surprise you. MSOS, weed stocks, baby. And why? Because I saw it moving today. It has been trading lower. I flipped this the other day, but today is Super Tuesday, and it just reminded me of the election trade and the fact that they're kind of trading in between when some people were getting ready for this. Just wanted to put this on the radar. I do think there was some bad news about reform lately that people have been talking about, so keep your eyes on this, but especially as we get into the political calendar, I feel like we haven't heard much about weed lately, especially in terms of the election and election cycle, so watch out for that. I will be looking on flips. I have no plays on that currently. That is play number one. Then play number two, oil. I made a play on this, and I just think oil is very important and tempting. It keeps flirting with $80. It broke above it, came back down. Now it's right below it today. I decided to make a play after the data, but quite simply, there's a peace deal on the horizon people are talking about before Ramadan with Israel and all of that stuff. So that could factor into it, but we're still getting drama overseas, and in a weird way, some people have not been reacting to oil and overseas. We just got OPEC news. Like I'm saying here, it's very simple. Bulls want this thing above 80. It goes crazy and brings in a lot of implications. Otherwise, it tops out at 80s and then starts to fall back home to the 60s, and then people start feeling good about everything else. So keep your eye on it at the very least. I made a play with micro crude futures. I got in at like 78.66, so $2 below 80 gives me some wiggle room. I was up and down and up on the play. I think I was down on it coming into the close, so going to look to swing this over the next couple days, and hopefully it just gets a lot of momentum above 80. I will probably get out before that or around there, and then probably play my double dip and keep watching, and then hopefully maybe we'll get some macro considerations, but otherwise oil going up is just fear. Maybe that's the new VIX, but that is play number two, and then finally play number three. This one I think is very interesting, and I want to put it on the radar. Broadcom. The chips ain't done yet, buckaroo. I thought I could use buckaroo, but earnings. They have earnings on Thursday after the bell. You may be able to go for the pre-earnings play if you want, but with all the data and everything else going on, just want you to keep this in mind because you still got one of these bigger cap or higher price chip names reporting. This could add to some of the sentiment, and lately these chip stocks have still been in their own world. Again, why even trade when you could buy NVIDIA? We saw more of that today, so keep your eyes out for Broadcom. We'll go over that preview on Thursday, but definitely going to be watching out for that. But those are the main plays. As far as everything else, I got rid of those bond plays. Like I said, got rid of SPR. I did a covered call on Roblox, or I covered that, made like $2,500. Got rid of one of the Pfizers. I made a play on Campbell's for tomorrow morning. Same thing with Thor, THO. That one was a good play for how much it was priced, $40 both way for $100, $150 stock. Thought it was decent. Made that Pfizer free. Sold out of the NCLH. That was 500% from earnings about a week or two ago. And then then I bought a GitLab on the post-earnings continuation for about 48 cents, but that one didn't hit. And then Ferg, that one we ghetto spreaded yesterday for earnings, ended up actually getting close to the money. But besides that, really going to be watching the China stocks and JD tomorrow morning. I don't think I'm going to play the bonds until we get the non-farms on Friday. I do think that will be one to watch because, again, there's a lot of divergences. And keep your eyes out for Apple. Again, that NASDAQ divergence, people are bringing that up, and it's getting not so subtle, but we'll see where all the data takes us. Maybe we get something to respond to beforehand. Other than that, play the schedule, get ready for the SEP, sprinkle on a little bit more earnings, and welcome to March, baby. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, when you clean off the rag, then you'll be able to clean off the table, baby. Oh, yeah, that was the message. That was the story, baby. Don't forget what you learned through the forest. But Chattadonia, drink that water. Stay hydrated. Stay healthy. I will see you in the AM. Drink that water. Get good sleep. Horde.